Lowering your car insurance is fairly simple to do, and we're going to go over the 5 steps that are going to help you get the better prices on your current car insurance, or if you're looking for new car insurance, we'll show you how to get those best prices as well. The first part that you have to think about is step 1, which is keeping a clean driving record. And that's obvious. You should always have a good driving record. The more tickets you have, the more accidents you have, the more the insurance costs. So keeping that record clean is going to help you in general across the board. The second way is to not just shop around with just getting quotes from one company. Don't just pick the best, easiest route to go, because when you're shopping for car insurance, there's always someone less expensive, but you also have to keep in mind the back end of it is what companies are you joining for that cheaper deal. Understanding the person that you can trust or the agency that you can trust is probably more important in this area than is getting the cheapest price. My recommendation is work with your local independent agent. If you have one locally, you know them, if you trust them, go to them directly. Try to find out if there's a way they can quote multiple companies, because independent agents have the ability to quote 5, 6, sometimes even 10 different companies at once, where you don't have to do all the shopping. You make one phone call, you get the price. If you like it, you go with that company. If you don't like the company, they show you a different company. So you have options when you go with those independent agents. If you are shopping for insurance and you don't have a local independent agent, I'll put a link in the description below where you can work with one locally as well. That'll direct you or connect you with the right company. The third is to bundle and save, which is pretty common. You're going to hear that all over the internet. You hear the Geico commercials, the Progressive commercials, is bundling and saving. That's the key thing. And that is very true, because bundling and saving is huge. Let's use 2 different examples. One, if you have your home and then you have your auto, bundling those together, sometimes you get a better deal on the home, but sometimes the home is more expensive. However, if you combine the whole thing together, you may get a 30 to 40+% discount off of everything. So if you're paying $200 a month for car insurance, 30% is $60 a month. That's very impactful. Even if your house is $100 or $200 more, it still makes sense to combine the two because you net an overall savings. The same thing goes for renters. Now, a lot of people just want car insurance. That's the easiest thing to go. The less I have to think about, it's simple. And don't get me wrong, insurance companies love just doing car insurance, except for one piece. They don't love the longevity that a single policy brings. And a lot of us are just going for single policies, but when you feel confident and you've got a multi-policy, you've got renters, which is essentially what's called a liability policy, you have car insurance, and maybe you have a boat or whatever, right? So you just have those 2 things. They know that the longevity of keeping you as a customer is longer. So what they do is they give a discount that makes sense to get it whether you need it or not. Hopefully you need it and you understand the value of it, because that's the point of having the insurance, is to get a renter's policy that covers your belongings, covers your liability. So if you do something and you're liable for it and someone goes to sue you, you've got protection there. That's outside of your car. You're in your apartment, you're doing whatever you're doing, you're walking down the street, you drop a piece of candy and someone slips on it, right? So that piece is going to protect you. Now here's the thing I'm trying to say. If you add a renter's policy, let's say it's $40 a month, and your auto is, again, $200 a month. You're going to save $60 on your car insurance per month. You're going to spend $40 a month on renter's insurance. You're going to net a $20 a month savings. And you have protection for all of the other things that we talked about and more. So adding a renter's policy makes sense in most situations. Where it doesn't is when you start to get into these companies that break off your policy. We do it all the time, because sometimes renters and auto, like you got such a good deal on the auto but not great on the renters, and you can mingle what's better for you. Again, if you understand the renters, I'll link a video that goes over it. It's worth it to have either way, but then it's deciding whether it's going to price-wise give you the best deal or not. Number 4 is to increase your deductibles. If you are willing to pay more out of pocket, you're essentially coming to a company that says, I want you to insure me. If I mess up, if I crash, if I do whatever, whether it's my fault or not, I want you to fix my car, or I want you to pay for my liability, my lawsuit, all of those things. If you're trying to do full coverage on your car or the comp and collision, and you go to them and say, I'll pay 500 of it, then they're going to say, oh, great, well, then it's less we have to pay, less risk. It's not likely you're going to have a claim. We know most claims are under 1,000 anyway, so you may not even file it. Let's lower the cost. If you're willing to go that next level, which is raise your deductible, say I want to do 1,000 of it, they're going to lower it again, because it's less likely you're going to file a claim with their insurance company. And that's all they're hoping for. They're really taking on the risk, taking the right premium for that fit, and hoping that you never call them again. That's the perfect customer. Now, don't get me wrong, they're going to connect with you if you do the right agent. They're going to call you on renewals. They're going to talk with you about the policy, make sure that you are getting the best rate and with the best company so that they can build that relationship with you. I can tell you from an agency standpoint, we focus on creating a small relationship with the customer because we want you to be comfortable coming to us with questions, not having to think that you have to fight the agent to get anything to process. Now, you might have to fight the company, but that's where that agent can back you up and help protect you in those scenarios. So they're two different things. Different video. In general, if you do raise your deductibles, that lowers the cost because you're actually taking on more risk. The fifth is taking advantage of many discounts. Now, the article I read talks about low mileage discounts, but in general, I think all of the discounts a lot of people are missing. But if you're driving less miles than normal, which is less than 8,000 miles, then you should tell your agent. Sometimes, some companies, most of them, will give you a discount for the lower mileage you drive. Typically when you're below 5,000, if you're 5,000 or below, it usually evens out to be about the same price. It's still worth it to try. So if you think you're only driving 3,500, let the agent know every year I only drive 3,500 miles a year, and they can give you a discount for that. Now there are a few companies that do mileage-based insurance. You can actually get a policy with an agent that says you pay a lower base rate, but you pay per mile. So your policy is always different every month. You're paying a different premium. It's a little bit rough to keep track of, but just know that it's cheaper. If you are driving low mileage, you gotta plug in a device or activate it on your phone where they're gonna watch and track the mileage. But if you're willing to do that, they're gonna give you a lower cost on your policy. Now, for those of you that are that next level and you're like, okay, I wanna protect more than just the basics, there's a few programs you should start looking at. There are a lot of companies that offer packages, and that's what I personally do, because there's a few things you can get. You can get cash back. You also get like vanishing deductibles. You can get where that deductible that you pay, that $1,000 if you raised it, can go down to 500 over the next, every 6 months it goes down a certain amount, right? So there's those discounts that you can add in there. Also, they do accident forgiveness. You can apply that. So if you have a young driver, it's really good to apply that accident forgiveness. That way, if they do have an at-fault accident, that's gonna save you on having that rate increase on that next renewal. That's a super huge thing. We have that just in case. You never know. If I go out and crash and it's my fault, if I'm not paying attention, it could happen. I don't want my rate to go up. And I'm willing to pay a few extra dollars for that just to have that protection. There's other things that you can get in different packages that you can apply for that different companies will give you. Now, I mentioned that there were many discounts, and there's probably 100. I'm working on a 100 discount spreadsheet that I'm going to give out to everyone. Hopefully I can get it done and give it out to you guys for free. But it's essentially being an alumni, being part of a motorcycle club, being part of a credit union, having a specific degree like an engineering degree, being part of a teachers association. It's no longer for certain companies. Most companies have said, we'll give a discount for that because they've analyzed all the data and they're saying across all of our people that we insure, we know that these are the lowest risks. And the lower the risk is, the bigger the discount they're going to give to try to attract that type of customer. They want the lowest risk, even if they have to give up a few dollars to keep that person in their company. That's why it matters going with different companies, because what happens is if you call an insurance agent, they're going to do what's called a profile. They're going to ask you, what's your name, date of birth, what's your zip code, or where do you live, what's your accident history, what's your claims history. It'll pull previous credit, all of those things. So it's going to create all of these packages that match up you to a company. And when you just call one company, whatever profile that that company gave you is what they give you a price on. When you go to those independent agents or those different companies yourself, you can even do it, is they're going to rate you differently for each company. That's why each company has a different rating factor for the product, the insurance that they're trying to sell you. Again, there's a lot more to that than just the pricing. There's a lot that has to do with the claims, the handling, the speed of claims, the headaches that you don't want down the road, and hopefully you just get to say later on that I hated having insurance because I never used it. That means you won. In that case, you technically lost because you paid for it, but you didn't have a claim when you needed it and you didn't have the right coverage. So having that piece is super, super big. That's why I made a video that's going to help you go through what coverages you should carry. It's the Car Insurance 101. If you're like, I already understand that, let me just understand some more of those discounts that you were talking about. We've got a discount video here as well. I'm Mark with Think Insurance. I'll see you in the next one.